Hello friends and welcome to the Coin Engineer YouTube channel. The 18th video of the Introduction to Technical Analysis series is the triangle formations and how to identify them. But before we start, I would like to say that you can have all the crypto information you need for free from our YouTube channel. So do not forget to subscribe and keep the notifications on for our upcoming videos. Triangles are horizontal trading patterns. A triangle forms when the price action narrows over several price swings. If we draw trend lines along the highs and lows of the price action, the trend lines converge towards each other, and this price action forms the appearance of the triangle. Triangle patterns are important because they help indicate the continuation of bullish or bearish price movement in the market. There are three types of triangle patterns: ascending triangle, descending triangle, and symmetrical triangle. Ascending triangles are bullish formations and they anticipate an upside breakout. An ascending triangle occurs by rising swing lows and swing highs that reach similar price levels. If we draw a trend line with similar swing highs, it creates a horizontal line, and the trend line connecting the rising lows is angled upward, creating the ascending triangle. Descending triangles are bearish formations and they anticipate a downside breakout. A descending triangle is formed by continuously lowering swing highs over time and swing lows that reach similar price levels. If we draw a trend line with similar swing lows, it creates a horizontal line, and the trend line connecting the falling swing highs is angled downward, creating a descending triangle. Symmetrical triangles, where price action grows increasingly narrow, may be followed by a breakout to either side, up or down. Symmetrical triangle occurs when the up and down movements merge to a smaller area over time. Connecting the swing highs and lows creates a symmetric triangle. Like the other chart formations, the idea is to identify the breakout point to enter a trade and set more accurate stop loss and take profit orders. We can use the breakout strategy on all triangle types. The execution is the same regardless of whether the triangle is ascending, descending, or symmetrical. We can go buy long when the price moves above the upper trend line, or short sell when the price drops below the lower trend line of the triangle. Our stop loss level should be on the opposite side of the breakout point, more preferably a little bit outside of the triangle, and our take profit level should be the height of that triangle. Now, to demonstrate it more smoothly, I will erase all these drawings and put an actual trend line between these areas. Now, as you can see that we have several triangles with breakout points on the chart. The idea is to identify the breakout point and the height of that triangle location so that you can use the height later as your take profit level. For example, this triangle tells me that the next price level might reach up till this level, and the former ones did indeed reach up to several levels, as you can see. In most cases, triangles are very efficient and they are used by many traders on a daily basis. Well, that is it for today. I hope you have enjoyed our content. If you did, please drop a like under the video, and if you would like to see more of our content, please click on the subscribe button. Thank you for watching and take care. Until next time.